Welcome to Inside India. I'm Amitoj Singh. These are your headlines. The US Senate votes to pass legislation that would end the record-long US government shutdown, sending the bill to the House for approval. The President Trump, he has said that the US is inching closer to getting a trade deal done with India. It comes as an Indian delegation kicks off a trade visit to Moscow. Indian authorities are investigating a deadly car blast that killed 8 people in the capital of Delhi, prompting high alert in several states. Well, let's start with a look at the Asian markets. Wall Street, it ended sharply higher on Monday, powered by Nvidia and Palantir, up nearly 6 and 8.8%. And that's what you're effectively seeing in certain parts of Asia, particularly Japan and South Korea. You have to read into how much the Asian markets look at those tech stocks in the US. South Korea's Kospi rising by 1.44% at this point in time. And it has already posted its biggest daily jump in 7 months, rising 3%. That was yesterday. Japan's Nikkei, it's also climbed about 0.43% at this point in time. And this was also after touching a one-week high of 51,513 just yesterday. Remember, AI-focused SoftBank jumping nearly 5% and contributing more, close to 200 index points to the Nikkei. And it's reporting earnings after the close of trading later today. This is the US and Asian markets are really digesting that tasty news coming out of the US Senate, the potential end to the longest shutdown in history, now in the hands of the House. New Zealand, the Shanghai Composite, and Hang Seng in the negative, though. And we're going to take a look at the US futures also. We talked about how Wall Street, well, it bounced back. It has been very interesting times out there. But for the moment, as you can see, the implied open, 0.6% for the S&P 500, 0.03%, 0.06% for the S&P 500, for the Dow Jones, 0.03%, and NASDAQ, 0.08%. This is, again, coming from optimism regarding that shutdown. And we did see AI stocks really bounce back. Whether this will be a muted opening at this point in time, it suggests so, but we can obviously look into the fact that now Senate lawmakers have actually voted to pass legislation that would end the longest-running U.S. government shutdown, and 8 Democrats actually won, joining those Republicans to get the vote through. It would keep the government funded through to the end of January without extending healthcare subsidies. The bill now heads to the House, where voting could take place as soon as tomorrow. It's widely expected to pass and will then head to President Trump's desk to be signed into law. Trump has backed the deal. We could see the government reopen as soon as this week, with federal workers starting to get paid again, and the release of key economic data that will be crucial for policymakers and particularly investors. Now, we're going to go back to what's happening in India. At least 8 people were killed and at least 20 were injured after a car blast in India's capital, New Delhi, on Monday evening. The explosion took place near the historic Red Fort, one of the most crowded areas in the city, and where the Prime Minister, Narendra Modi, gives his Independence Day speech from. CNBC TV 18's Abhimanyu Sharma joins us now from New Delhi. Abhimanyu, you're at the scene. Can you give us the latest?
Well, sample collection is underway from the forensic teams of the Delhi police. Behind me we can see several cops who are stationed out here since last night, and there has been a consistent surveillance as far as the entire area is concerned, and also several people who are being questioned as part of the investigation that's taking place, even as the FIR which has been registered at the Kotwali police station mentions sections pertaining to the UAPA, that is the Anti-Terror Act, and even right now sample collection is underway. Now towards my right is the iconic Chandni Chowk market, which for now is closed, and there is a temple out here, and then there are several other religious places ahead too, and currently sample collection is underway at several places in the vicinity. Samples are being collected to ascertain the entire damage, and also to come to the final conclusion as far as investigation is concerned, which is still underway. The injured are still being tendered treatment at the LNJP hospital in Delhi.
All right, Abhimanyu, we've been hearing comments coming from the police. The spokesperson of Delhi police was one of the first few to comment. But then you also had the Home Minister himself come to the scene and make a couple of statements. What's he saying?
Well, for now, as far as the Delhi police spokesperson is concerned, the DCP of the area, he has indicated that many specialized teams of the Delhi police and of the forensic department are already on the site. Also, NSG, that is the National Security Guard, they also had sent their teams to the place, and currently the entire extent of the blast, the extent of damage, and also the cause behind that is being investigated threadbare as part of the probe which is being conducted by the Delhi police. Now, not just people from the Indian government, but also several investigators from premier investigation agencies, NIA and NSG, had reached the site last night, and samples were collected. Samples are still being collected, and it is likely that more people are likely to be questioned as far as the probe is concerned.
All right, Abhimanyu Sharma out there from the area where the blast took place, right next to the iconic Red Fort in New Delhi. Thanks so much for joining us. Now, the blast will be weighing on the Indian markets, which come online in about 40 minutes. Here's what GIFT Nifty futures are indicating at this point in time. GIFT Nifty really foreshadowing a positive start for Indian equities on Tuesday, but mildly so, 0.11% only. That is interesting because over the past couple of days, it's gone below 25,500 at this point in time, indicating a bit of a jump of 200 points, nearly 250 points actually. That'd be interesting. Whether this has got to do with the US government shutdown perhaps ending soon, or AI stocks rising in the US, that's an interesting question. And of course, the US dollar also, as opposed to the Indian rupee, very interestingly, it actually ended at 88.6975 last evening. It's remember, an all-time low of 88.80 that they'll be watching out for the central bank, which came in late September, and the RBI has in fact intervened to stem that drop in the past, according to reports. So we'll be watching that space very closely. Now, the markets will also be digesting new data on the state of employment in India. The unemployment rate dipped to 5.2% in the July to September quarter, slightly better than 5.4% in the previous 3 months. Government data shows the improvement was led by stronger rural hiring during the farm season and a continued rise in women joining the workforce. Rural joblessness eased to 4.4%, though urban unemployment inched up to 6.9%. In rural India, more people turned to self-employment, mainly farm-related, while cities saw a small rise in salaried jobs. The Labour Force Survey estimates 562 million people that they were employed during the quarter. Now, US President Donald Trump has once again sprinkled some optimism on the India-US trade relations while swearing in the country's ambassador to New Delhi, Sergio Gore. He said he may travel to India next year. That was said earlier. Now he's saying that the US is getting close to reaching a deal with India. A deal that would boost American energy exports and promote investments in key sectors.
As Ambassador, Sergio will work to fortify our country's bond, promote investments in key U.S. industries and technologies, increase American energy exports, and expand our security cooperation. And, you know, we're making a deal with India, a much different deal than we had in the past. So right now they don't love me, but they'll love us again. Well, right now the tariffs are very high on India because of the Russian oil, and they've stopped doing the Russian oil. It's been reduced very substantially. Yeah, we're going to be bringing the tariffs down.
All right. Now, this comes as a high-level delegation of more than 20 Indian exporters begins a 4-day visit to Moscow today. New Delhi is looking to diversify its export markets amid steep U.S. tariffs. India's exports to Russia jumped nearly 15% last fiscal year to $4.9 billion, helped by Western firms exiting after the Ukraine war. But imports, mainly oil, have slowed recently due to U.S. sanctions on Russian crude. And this visit sets the stage for a critical diplomatic moment, with President Vladimir Putin expected in India next month. All right. Subbarao is a former governor at the Reserve Bank of India from 2008 to 2013, and he's joining us now, the former governor of the Reserve Bank of India. Sir, it's a pleasure to have you back on CNBC. I think it's important to have your wisdom in these, tricky times. Thank you so much for joining us. I want to start by asking you that, you've steered India through the 2008 financial crisis. How do you really view the efforts to steer India through this trade war? You heard Donald Trump speak a short while back that the trade deal can be expected soon. How do you view it?
Well, I realize that it's a very difficult moment for India because exports are important. America is India's largest trading partner and one of the few countries with which we have a trade surplus. Exports to America constitute 20% of our total exports, or 2% of our GDP. Meanwhile, tariffs have gone up from 2.4% before Trump 2.0 to 50%, the second highest in the world after China. So this is going to have a significant impact. In fact, some experts say that our growth could be shaved off by 30 to 80 basis points, which means that if you're expecting to grow at 6.8 to 7%, growth could go down to 6 to 6.3%. That's going to be a significant impact. In fact, what's even more worrying is the impact it's going to have on our job situation, because much of these exports to America, textiles, machinery, gems and jewelry, pharmaceuticals, they're produced by MSMEs, small and medium industries, which are job intensive across pockets around the country. So if exports to America ahead, it's going to be a disproportionate impact on jobs. That's going to create or increase inequality across people, across regions. So it's going to be a very difficult situation for India. And we have to contend also one other thing, not just direct exports to America, but also the possibility of China dumping in markets around the world where we and China compete. So India might be competed out. So the impact of Trump tariffs is going to be significant on our growth, on our inflation, and importantly and worryingly on our jobs.
Very interesting, sir. I just want to get your comments on some of analysts actually making the point that the impact of such tariffs, which you think are certainly going to be there, are much more on market sentiment than on real growth. So I just want to get your take on that.
Well, so far it's been market sentiment because much of the price increase on account of tariffs has been absorbed by the importer on the American side. But that's not going to last. That's an unsustainable situation. If tariffs are going to continue, the increase in price will be passed on to American consumers. So it's going to be, then exports will be hit. In fact, I've seen some reports that exports over the last quarter have actually gone down by about 40%. So I don't agree with the statement that it's more market sentiment than reality. Reality, perhaps a little bit right now, but the reality is going to catch up with us as soon as tariffs ripple through the economy.
All right, that's interesting because then it's a matter of timing, really. I just want to get your sense on what you think about timing, because how important is the ongoing election in India's eastern state of Bihar, which is currently voting in the second phase. We had an analyst on our show just yesterday who indicated that India might be waiting for the politically charged Bihar elections to end this weekend before any announcement on tariffs, because there might be agricultural concessions in the deal. How do you view that?
Well, in India, there's some election all the time. So it's now Bihar election going on, and by next week it'll be done. Perhaps it's quite true that the government is waiting for Bihar elections to be over to finalize the deal with America, because as you said, agriculture is a big deal, one of the negotiating issues in the trade deal. And America is forcing India, pressuring India to make some concessions, give way to American exports into India. So if the deal includes, and I think it will, some concessions by India on American agricultural exports to India, I think waiting till after Bihar elections might look like a logical thing to do, but I have not heard any speculation like that, because the timing will depend as much on us as on America. So I don't give much credence to that speculation.
Very interesting. Then would you give credence to this particular thought, that India's large domestic market, is a protection against such Trump tariffs?
Not so much. Certainly, India has a large domestic market. The middle class itself is 800 million, growing. It's as we grow faster, the middle class is going to expand. There's going to be a big consumption market for any attraction for foreigners, including Indian investors. But I don't believe that we can depend or over-depend on the domestic market as a buffer. It's got to be, our exports have got to be in addition, not in lieu of our domestic market. Because over the last 25 years, if you see India's growth record, every growth episode has been accompanied by increase in exports. So there is a strong correlation between India's growth and India's exports. So I believe that exports are important. But even if you look around the world over the last 75 years, every country that has graduated from low income to middle income and from middle income to high income has done on the back of exports. So for India to believe that it can depend entirely on domestic market to maintain its growth momentum, I think will be mistaken. Certainly our domestic market is a big buffer, but it is in addition, not in lieu of our export effort.
All right. I want to just get a sense from you. You've been in the negotiating rooms in the past. You've taken India through that 2008 financial crisis. There are negotiations going on with the US, the EU. We've had that UK trade deal. We've had the Prime Minister go to China. New Zealand negotiations happened last week. We had EU negotiators in Delhi. Now a delegation of, very interestingly, more than 20 exporters, not government officials, exporters from the engineering sector are going to Russia. And all of this happening when the US is putting pressure on India regarding Russian oil. I just want to understand, this is like negotiations happening on so many fronts. How does a country actually calculate how to move forward under these circumstances?
Well, in some sense, the tariffs that President Trump imposed put urgency across the world, in every country, including India. So for a long time, India has been going slow on negotiating bilateral trade agreements. But now, because the American market has dried up to some extent, and we don't know how long it will remain like that, we don't know whether it will come back up to the previous level, in fact, even exceed the previous level. So there is pressure on India to arrange or agree on bilateral trade arrangements with a number of countries, and that explains this agility. And I believe that's a force for the good. If we have a deal with America, that's certainly good. But if we have a deal with a number of other countries in addition to a deal with America, that's wonderful.
All right. I just want to get back to the India story a little bit. Internally, the inflation story. India's retail inflation, it fell to an 8-year low at 1.54% in September. It's been trending downwards. It's estimated in Wednesday's new data release to drop to below 0.5%. How do you really view this?
Well, inflation has been low because inflation over the last 2 years has been triggered by high food prices, and food prices have softened, and inflation has certainly softened. And growth at 6.8%. India is the fastest growing large economy in the world, and in fact, the government estimates that the growth in FY26, the current fiscal year, could actually be nearly 7%. That's remarkable. But much of the concern is about the Reserve Bank's monetary policy stance, why the Reserve Bank is not softening its monetary policy stance further because inflation is low. If you look at the real rate, for example, the reported is 5.5%. If in fact inflation comes down at 0.5%, as you said just now, the real rate will be 5%, which is significantly higher. So there is a strong case. In fact, many people think it's an open and shut case for the Reserve Bank to soften its interest rate regime. But I believe that the Reserve Bank is watching and waiting for understandable reasons. Number one, they want the impact of the earlier rate cuts to work through the economy. Number two, there's a lot of uncertainty around the world because of tariffs, all that we've been discussing over the last 10 minutes. and that those tariffs could impact growth, could impact inflation, could impact exchange rate. There are too many moving parts, so RBI might be waiting for that. And most importantly, in my view, is the following question. Investment is low today, and one of the worries about the India growth story is that the private investment has not picked up yet. So the question people ask is the Reserve Bank's interest rate policy the binding constraint for investment to take off? I don't believe that's the binding constraint. In fact, the binding constraint is lack of demand. When demand picks up, private investment will come. So there are a number of factors which justify the Reserve Bank's wait and watch attitude at the moment.
We had Dr. Jayanti Verma, the ex-MPC member. He had commented earlier this year that India's real interest rate is just too high. You alluded to this, but he went on to say that this rate could dampen growth prospects. I'm not sure if you are alluding to that right now. Can you give us a sense?
No, I'm not alluding to that right now, but I'm just making my comments with reference to RBI's norm, which is that the real interest rate has to be 1 to 1.5 or maximum 2%, where the real interest rate now is about 4 to 4.5%, could go, in fact, to 5% with the next inflation number. So I don't believe that it's the real interest rate that is hindering investment right now, as I said earlier. Certainly, that's a variable in RBI's calculation, but what is stopping investment, private investment now, is actually demand that has to pick up. And that's improving, I believe, with the GST cuts and with the income tax cuts, but we're not yet there.
All right, I'm going to double click on this a little bit and put you in the hot seat, which you've been in many times, so this should be comfortable for you. Do you see the RBI cutting rates in December? Yes or no?
I don't believe so. If you want a binary answer, no.
All right. Apologies for that binary question. All right.
No, not at all.
We've had the RBI policy action been influenced by practical fiscal considerations, and you kind of spoke about that in a sense, along with monetary considerations like the GST reforms. How much of that is different from the past, in which central banks try to restrict themselves to monetary considerations?
Well, there's always been a nexus between monetary and fiscal policy. Some governors have spoken about it more explicitly, some governors less so. But certainly there's got to be coordination. I'm not saying that RBI should give up its independence, but RBI should certainly coordinate its monetary policy with the government's fiscal stance without giving way to what economists call fiscal dominance. And today, I believe that fiscal monetary policy coordination is somewhat less complicated than before, because the government's fiscal consolidation has been credible, especially the central government's fiscal consolidation has been credible. If you're not yet there, you cannot declare victory. The debt to GDP ratio is still high. There's a strong case for fiscal deficit and debt to GDP ratio to come down. But there is the view that fiscal monetary policy coordination is less complicated today than before. But while we're on the fiscal issue, I also want to say that if you're going to evaluate or look at India's fiscal stance, it's important to look not just at the centre's fiscal stance, but also at the state's fiscal stance, because collectively the states borrow more than the central government, they spend more than the central government, and how the states perform on the fiscal stance is important for India's overall fiscal stance.
All right. Unfortunately, we are completely out of time. I wanted to get a sense from you about the US dollar and the Indian rupee and the RBI's reported interventions, but we're completely out of time, sir. I really appreciate you joining us on CNBC. Thank you so much. That was Duvuru Subbarao, former Reserve Bank of India governor. All right, the 10th edition of Google and Temasek and Bain & Company's annual report on digital economy in Southeast Asia is now out. What are the findings this year? We'll hear from them right after this short break. Welcome back. We're counting down to the market open in India. This is how we're shaping up. Remember, news coming in from the US that the government shutdown is likely, well, probably set to be lifted because now matters are in the House. The Senate has gone ahead and given it a green light, and GIFT Nifty futures not really reacting to that at this point in time. Things will likely be slightly muted, but what you are also seeing is the US President Donald Trump indicating that India and the US are nearing a deal, and that might have a late impact on Nifty 50 as it digests the news. Right now, around 25,574, could go up to about 25,728. And similarly, we'll be watching the US dollar and Indian rupee. Right now, it's inching closer to that record low, somewhere in the range of 88.8. Not looking good. Now, Goldman Sachs is turning bullish on India. The brokerage has upgraded India to overweight from neutral, reversing last year's downgrade, saying earnings momentum is improving and policy support is kicking in. Goldman now sees the Nifty 50 at 29,000 by the end of 2026. It says India's earnings downgrade cycle has bottomed out with rate cuts, easier liquidity, GST tweaks, and slower fiscal tightening, all helping the recovery. Sectors like financials, consumer, autos, defense, telecom, and oil marketeers are expected to lead the bounce back, while IT and pharma may stay under pressure. And despite heavy foreign outflows this year, Goldman sees domestic investors and SIPs keeping markets supported. The Indian government is moving to make it easier for consumers to buy domestic products online. A new draft rule proposes that e-commerce platforms must offer filters based on country of origin, making Indian goods more visible and supporting the government's self-reliance push. The move comes as Indian artisans and small businesses struggle following the US doubling tariffs on certain goods to 50%. The amendment seeks to ensure a level playing field for Indian manufacturers alongside imported goods on online platforms. In the meantime, a joint report by Temasek, Google and Bain finds innovation is leading the growth momentum in Southeast Asia's digital economy. Let's go out to JP Yong now, who has got a chance to delve deeper into this report. JP, tell us how you're enjoying this opportunity.
Yeah, Mitoj, good morning to you guys. And this is the 10th edition of the C-Economy report issued by Google, Temasek, and Bain. Can you believe that the three of them, the three amigos, have been doing this for 10 straight years? And a lot has changed with regards to the e-commerce and the global digital economy here in Southeast Asia. Among the key points to remember here is that apparently we are ahead of schedule or ahead of forecast, about $300 billion now in terms of gross merchandise value across Southeast Asia, which again is significantly again what these three were actually foreshadowing a couple of years back. And if you're asking about profitability, keep in mind that the revenues and profits have been growing on average by about 14 to 15%. So again, there is a lot of momentum there. But perhaps the bigger thing to really note here is that while the growth trajectory seems to be intact, it's what's fueling it that might be changing. And one of the biggest new proponents of that fuel might be coming from artificial intelligence, which is turbocharging 6 major sectors in the digital economy here in Southeast Asia. But how they're turbocharging that and how that perhaps might be reshuffling things as we're heading to stay on this growth trajectory is something we would like to ask our next two guests, who both are from Google, actually, Temasek, to help us understand this report a bit more in depth. As usual, we're joined by Sapna Chada, the Vice President for Google here in Southeast Asia, and also Phuoc Wai Hung, who's the head for Southeast Asia at Temasek, to tell us more about how this might be changing the calculus as we stay intact with the growth. But Sapna, I want to start off with you, because while the calculus might be changing under the hood, the growth trajectory seems to be intact. And again, the report identified 6 sectors, the usual suspects: e-commerce, gaming, fintech, to name a few. Basically, where are you seeing more of the growth coming from in terms of Southeast Asia's digital space, and which of these sectors might be seeing a little bit more prominence as we stay on this path towards growth in the digital economy here?
No, thanks for the question. You know, I will say we're 3 years ahead of schedule from where we thought we were going to be in terms of the entire digital economy, and so that we're seeing real strides and real growth and momentum. In terms of that particular growth, I would say commerce continues to be the undisputed champion of the digital economy, and we're seeing that growth. It's more than half of the digital economy on whole. But what's really changing is what we're seeing with video commerce. Video commerce now has become 25% of all e-commerce happening in the region. And this is on the back of a very video-engaged population who are using AI tools like never before. They are driving profitable businesses and transactions, and this is leading to growth in the digital economy. We've seen a huge growth in this space with 3 million sellers that are actually partaking in this incredible economy that's growing and fueling and inspired by passion. So the video-engaged population, a huge growth in users, as well as this creator economy who are using these AI tools, is really creating this entire momentum in the digital ecosystem right now.
So 3 million new players. You've got a number of new players in the digital economy, and also a lot of companies that apparently are now becoming even profitable. And that is the big question to ask, really, when you talk about the startup space. Whenever there's more scrutiny now on making sure that these companies are profitable. And Wai Hung, you have actually said that that seems to be the case. What do you think is fostering the shift towards viability and profitability? And do you think that perhaps there is a justifiable emphasis on making sure that these companies can be more profitable and not just put up promise?
Thanks, JP, and it's great to be back on the show. You know, a couple of years ago when we sat here and you asked, we were talking about the digital economy, it was very much oriented around growth at all costs. And we saw GMVs rising, but there was very little focus on revenue and profitability. Over the last several years, that's obviously evolved as people have, or companies more specifically, have really focused on revenue monetization. You've seen the numbers in our report. Revenue growth continues to keep pace with GMV growth. And I think most importantly, that drive towards profitability. Companies have, I think, become much more sophisticated. Management teams, founders, really focus on optimizing and calibrating that balance between growth as well as bottom line profitability and sustainability. And I think what's been really exciting for us to see is in the last year and change, companies now have an additional tool in their quiver really to drive towards that. AI, as you alluded to earlier. We polled a number of investors and asked them to look deep into their portfolio companies and give us some sense as to the impact that AI is having. And what was really interesting is 86% of their portfolio companies that are using AI had experienced cost savings and cost efficiencies. 71% of them had really, actually more than just costs, seen a meaningful increase in revenue monetization. So using the same amount of resources they've got, using AI to supercharge that and driving revenue growth. So I think, once again, AI is a very powerful tool to drive both top line and bottom line and really drive towards sustainable growth for the digital economy.
So it seems AI is one of the big reasons why we're seeing profitability actually becoming a reality. But at the same time, while the direction of growth continues to be intact, Sapna, how the fuel or what's happening under the hood might have changed. And you're seeing a lot of these sectors in varying degrees being transformed by artificial intelligence. Based on what Google's seen, how has this reshaped how Southeast Asia's digital space is growing? Because while the growth is intact, perhaps how we're going to get to the growth might be changing right now. What have you observed?
Well, what we first observed is that you should look for behaviors here that you might be looking for in Silicon Valley or in mature markets, right? The emerging economies, particularly here in Southeast Asia, you see we are the most curious region in the world when it comes to AI. If you look at our Google Trends, for example, we have 3x the general average in terms of AI interest. So that interest is then leading to usage changes, and we're seeing people lean into how they're using AI to discover new things. We're seeing almost 75% of consumers are saying that they're able to discover new things in new ways by using AI. So that's changing in terms of the behavior that we're seeing. But they're also saying it's actually, again, helping them with doing things efficiently, right? So it's time savings. It's not just around new discovery. They're saving time in their day-to-day. And so this is becoming useful to everyone, and that in turn is leading to this demand for upskilling, right? I think what's really unique about this region is this pull that you see from everyone, from students to people in the workplace to drivers. Grab, for example, I think one of the best examples I use, they have 250,000 drivers that are using an AI companion, and they're able to find the more efficient routes in their day to help them boost their daily earnings by 10 to 20%. So you see this pull across the board. And then that's leading to people's, again, more interest. That interest is then, we're seeing people are enrolling in classes like we haven't seen elsewhere. In Vietnam, we've seen a 5-fold growth in enrollments just in the last year. In Singapore, it's double. So it's across the region where we see this pull and this interest. And on the back of that, now you have an AI-empowered workforce. Businesses, as Wai Hung were saying, are seeing the real momentum of this, and they're seeing the impact. 70% of them are saying that they're seeing ROI in 12 months. Right, so the real business impact of AI is being felt.
But the upskilling, is it enough to keep up with the growing demands that seem to be exponential? And from Google's point of view, what do you think is important to make sure that they can meet the demands of the future demands of a Google or other tech companies, large or small, in making sure that they have AI-ready workforces that can provide the needs of companies like yourselves or the broader ecospace?
You're right. I mean, while there is a pull, we should all be committed to this. And as Google, we are very committed to driving skilling in across the board. I would say for workforces like ours, that's important. But I would say with humanity at large, right? We are investing in areas like investing in farmer education. Farmers are using AI, right, to be able to find, the best solutions for their soil challenges. Right, so we have made commitments with ASEAN where we're investing to skill 5.5 million in the upcoming future. And we're committed to doing that. And so I think this broad scale approach is what's really needed, not just about, the top tech talent.
Okay, so regardless, there's profitability, there's a lot of growth, there's a lot of excitement at the moment. My question to Wai Hung is this enough to make sure that the funding winter that everyone's been talking about with regards to tech actually eases? And I'm asking you that because, the selectivity is coming from investors like Temasek, the demands for making sure that profitability is intact, that growth is there. Do you think that AI and the fact that we're seeing improving profitability is enough to make sure that this funding winter is going to thaw, if not today, perhaps by next year?
So I guess maybe I'll try to answer that question in a couple different ways. Maybe we'll start with some statistics. So I think this year overall funding has been about $8 billion US, which is stabilized and flat over the last year. Actually, if we look at the most recent numbers, we're actually 15% up year over year. So once again, I think optimistic signs that investor confidence is returning to the region. If you then think about AI as an investable space, actually this year for the first time, 30% of all digital economy funding was actually directed towards AI startups. There are close to 700 AI startups across Southeast Asia, and they've actually garnered a very significant portion of that funding capacity that is flowing into the markets. And from what we can tell, we think that'll only continue just in terms of that pace of deployment. Once again, going back to the polls, I think the investors that we've asked, I think to a man have indicated that the amount of funding that they think will go into AI-related businesses, I think will certainly increase over time. I think what's exciting to me as an investor is, quite frankly, looking at the entire AI value chain is the investability across a very broad swath of opportunity sets, all the way from sort of the AI enablers, whether it's data centers, the power, the cooling that surrounds that, the foundational technology, the chips, once again, that power the data centers, the foundational models, the applications and products that sit on top of that. And then the AI adopters, the people that are going to be utilizing the AI, once again, to drive more productivity and better cost efficiencies and discover new ways of doing business. So I think all of it is quite interesting. Now,
one thing I noticed from the report, while there's been a lot of a leaning towards AI and increased in funding towards that, there is one sector that seems to be getting a lot more attention from the likes of Temasek or other private investors, and that is digital financial services. Can you talk to us about why the opportunity, what's driving more interest here rather than other parts of the digital economy? And is the opportunity here bigger than we actually thought in Southeast Asia?
That's a great question. I'm just going to go back to what Sadhana said earlier. I think if you look across all the big 6 segments within the digital economy space, every single one of them is going to be able to utilize and has been utilizing AI to really drive profound economic change and growth. And we think that will continue to be the case most certainly. Then if you think about, I think digital financial services is actually being a core monetization pathway for a lot of businesses, whether that's being e-commerce or ride-hailing. All of them have been using, and SaaS businesses too, using embedded finance and digital financial services really as a core monetization tool. Now, AI just supercharging that, and once again, customization, personalization, the ability to make better decisions, curation of I guess, content and products for the financial services space, whether that's asset, digital wealth management and the like. I think we continue to see that grow very, very rapidly. So I think the answer is yes. Digital financial services has been attractive, will continue to be attractive, is likely to continue to grow faster than what we've seen before.
Now, I only have a little bit of time left, and I'd like to get both your thoughts on this. One thing that I've noticed also is that we can't seem to view, probably shouldn't be viewing these sectors in vacuums, because AI seems to be feeding into all these sectors. And again, if you have improved e-commerce, you suddenly create a demand for digital services and vice versa. Can you talk to us about how that might change how we view digital commerce? Perhaps not in terms of silos, but in terms of broader ecosystems. I want to start with you, Shasana.
We're already seeing that, you could say. With e-commerce started, I would say, the real fuel at the beginning. Then payments really then turbocharged what was happening on e-commerce. Post that, you saw that retail media networks started to rise on the back of this, right? This means that, players like in e-commerce are doing multiple things, and they're able to engage with users in new ways. And they're able to upsell into new categories. And then on the back of that, they're investing in digital media and advertising, right? So you see this, evolution of the business model that all started in one place, but these various pieces are turbocharging them.
Very interesting.
So I don't have too much more to add to what Sadhana's already alluded to. I'll just throw out one statistic. 10 years ago, if you looked at the penetration of the digital economy into the real economy, we're about 2%. Today, it stands about 7%. So you can see how how much digital economy has grown and how much a significant portion it is of the real economy, of the overall economy. And I think looking forward the next 10 years, I'm real excited to see where we go next.
Anything that might be might trip any of these particular with these optimistic forecasts, because we always have to be cognizant of possible risks. Anything you're watching out there, Satna?
I would say, I mean, we've weathered a lot of risks so far. I think the one area I would say is businesses to be mindful of building trust in this moment, right? That is the key, that the user and the consumer stays in the driver's seat as they go forward, and businesses will need to empower that.
All right, very interesting.
No different from an investor point of view. I think trust, once again, breeds confidence, and confidence is what allows investors to engage more deeply in the companies that they're backing. And I think once again, the governance levels of startups, of businesses, I think is paramount. As we think about investing in the growth space and the later stage space, governance and driving good, high quality, world-class governance is absolutely paramount.
Okay, I must say that this 10th edition of the C Economy might actually be one of the more interesting ones we've seen actually in years. And again, where AI is going to take us is going to be on the forefront of everyone's minds, not just yourselves, but everybody watching this program. Sapna Chada from Google and Fokoy Hong from Temasek, thank you so much for joining us today and helping our viewers understand what exactly is going to be important, the key takeaways from the latest trends with regards to the C Economy. Growth is intact, it's ahead of schedule, but it'll keep going, and how it changes because of AI, it's anyone's guess. Amitosh, it's back to you.
All right, JP, thanks so much for that. I'm pretty sure that anyone who's a stakeholder on Digital India, Digital India stack particularly, will be watching this conversation to learn about what's next in Southeast Asia and how there can be collaborations around that. All right, while we were hearing of easing trade tensions between India and the US, China is also taking steps to compromise with Washington on key areas like fentanyl and shipbuilding. Elaine Yu has the latest.
Yes, Amitosh. So both Beijing and Washington are making good on the agreements after the two presidents met. And the latest move now is Beijing tightening control on fentanyl precursors headed to the U.S., Canada, and Mexico. Now, Chinese authorities have added 13 precursor chemicals used in the production of fentanyl to its export control list, meaning they'll require licenses when headed to these destinations. And already on that list are Myanmar, Laos, and Afghanistan. This is a significant shift from Beijing's previous stance, which has repeatedly said fentanyl is the U.S.'s problem and it is that country's responsibility to solve this issue. And on the part of the U.S., since yesterday, Washington has lowered fentanyl-related tariffs from 20% to 10%, which could offer some relief to the Chinese economy. Morgan Stanley said this 10 percentage point cut could lift China's export growth by about 1 percentage point, but the bank still warned that reflation remains slow in the country. Now, FBI Director Kash Patel reportedly visited China last week, staying for about a day to talk about fentanyl and law enforcement issues. The Chinese Foreign Ministry did not elaborate on this, saying they don't have information, but this does signal a very high-level cooperation. And also, on the maritime front, China's Commerce Ministry has suspended sanctions against U.S.-linked subsidiaries of the Korean shipbuilder Hanwha Ocean, in addition to both sides suspending port fees on each other's vessels. So progress is being made on this front. Amitosh, it's back to you.
All right, thanks so much for that, Elaine. Friendship is important, isn't it? Now, Indian markets have joined the trading day. We will look at some movers in Mumbai right after this short break. We'll be back in 2. Welcome back. The Indian markets are coming online, and you can see that it's been a bit of a muted start. Nifty 50 down slightly, 0.16%. It's digesting the news. Give it some time. There's a lot that's happened. There's been a blast in Delhi. There's been developments in the U.S. Donald Trump saying that, well, the India-U.S. deal will happen pretty soon. The U.S. Senate voting to end the shutdown. It still has to go to the House. There's a lot that's developed. The AI stocks really doing well, back in the good books of the sentiment of the markets. That's happened, and the Asian markets reflected that, particularly tech-heavy South Korea and Japan. At this point in time, the Nifty 50 still digesting all of that that's taken place. The U.S. dollar to the Indian rupee. The Indian rupee weakening just a little bit, going above what it was yesterday, actually 88.69, now 88.70. It's positive 0.03% in the last 15 minutes, but since last night, it's changed just a bit. We're going to be watching whether the RBI continues to intervene, as has been reported. But let's move on. There's a lot that's likely to happen in the Indian markets. We're going to be watching, literally keeping our eyes on eyewear giant Lenskart. A quick check on how that stock price has been doing. It did not fare well on day one. On the second day of trading, the Indian eyewear retailer had a choppy debut yesterday. Right now, it's back up almost, well, it's jumping around a little bit, 1.60%, but it fell as much as 11.5% before recovering some ground. The SoftBank backed group had raised $800 million in its IPO with strong demand subscriptions, but high valuations ahead of listing got some investors jittery and nervous. Lenskart's listing comes amid a wave of tech-linked IPOs, including stockbroker Grow and fintech firm Pine Labs. The company says it will use the IPO funds to expand retail stores across India and invest in technology and marketing. There's another stock we're watching, Bajaj Finance. It has dialed back its growth ambitions for this year, so the market has responded. 0.89% down. The lender has cut the growth forecast of its assets under management to 22/23% for FY26 from 24-25% earlier, so just about 1 or 2%. This is bad loans rise in its MSME book, and competition heats up in home loans. This comes as Bajaj Finance posted a 22% jump in quarterly profit to about $585 million with strong loan growth. But asset quality slipped, with gross NPAs rising to 1.24%. And there you see the market reacting, well, reasonably strongly, nearly 7% down. But we're also watching another troubled company. Telco Vodafone Idea has managed to narrow its losses this quarter, though it's still deep in the red. The company reported a loss of 55 billion rupees, better than expected and lower than last year's 71 billion rupee loss. What helped? Well, more users are shifting to its higher paying 4G and 5G plans, pushing average revenue per user up 9%, but that still lags far behind Airtel and Jio, its competitors. Revenue was up a modest 2.4% to 11 billion rupees. But the big overhang remains, over $22 billion in debt and a large payment due in 2026. Analysts say fresh funding and potential government relief will be critical for survival, even as the Supreme Court in India has allowed a reassessment of what it owes. Well, you're taking a look at the Vodafone Idea stock. We're watching several other stocks. This is Inside India. That's all the time we have today on the show. Keep watching CNBC. And Access Middle East is up next.